So, we've got quite a few retail traders. Well, most of you are retail traders here. And through my experience with coaching new traders, retail traders, experienced retail traders, what I've always found is that everyone tries to find the perfect trade. They try and find that trade that they are confident to enter, that they know, or they feel that they know they're going to definitely make money on. So with that thought in mind, that's also one of the major pitfalls that generally causes most retail traders to lose money, right? So this is also one of the reasons why we do this currency call, these videos here to help retail traders. Why I say that is because if I show you my charts here, my screen here, before I get into the yen pairs and gold, I'll just show you like an example of the analysis that I did on Monday. This was the Aussie dollar on the H4 time frame. My expectation was for it to test 7120, and if it breaks 7120, I'll be looking to sell. What we have actually seen is that it didn't go down, it didn't test that level. It's in fact gone up, and as an update, I do think that it will probably come back down towards 7120. But this would be an example where your key levels, your trigger levels are very important. It tells you exactly, you need to have those trigger levels to tell you when to sell. You're not looking for a trade, or you shouldn't be looking for a trade to jump in straight away. If you can, that'd be great. But usually we have price levels that we're going to say, at that price level, if it looks good, I'm going to be selling. With proper risk reward, we were sharing this on Monday. We were saying at about a 30 pip stop loss for a good 90 pip take profit level. Very good risk reward ratios there, but only if it breaks that 7120. So this would have been a very good trade if it did break, but it's also a good trade that prevented us from entering and losing a big amount. Same thing with the New Zealand US dollar here. Expected it to break and didn't, it bounced up. And a lot of traders would have jumped onto that emotion of saying, hey, it's going up, can I look to buy? And most of the time you end up buying when it's a bit too late, and then it starts sitting right across again. So have your trigger levels, respect those trigger levels, and only enter a trade when it hits those points. That's one way to be a little bit less emotional with your trading, a little bit more systematic with your trading. And when you have a process that you repeat over and over again, your results becomes a little bit more repeatable and definitely a lot more profitable.